this lesson, but sometimes you might have a problem of recording it well because of the problem of might have some problems of network, but no problem. We'll try our best so that we will have a file. Let's start here with what I want to see from the course outline here. Like what I said, today we're going to look on the inventories. I shared a book with you. Okay, you've got main accounting standards here from IS1. IS1, that's the presentation of financial statements, which is very critical. Then we have got IS2, which deals with inventories. So we are going to look on inventories today. In the first part, I still remember last time I took you in some of the courses in the presentation of financial statements. I still remember last time at the lesson with you as a guest lecturer. Anyway, so IS2 inventories here. Inventories, we need to be very careful on this one because this one is very critical in the business. Because if there is no inventory, the organization or the firm cannot survive. Because inventory, that's the lifeblood of the company. These are part of the current assets, which are very critical. So inventory, it should be accounted accordingly, according to the international financial standards, which we are supposed to follow as accountants. Not just to say we do what we want, we need to follow the proper standards. Anyway, what do we mean the scope of IS2? What do we mean by the word inventory? These are held for sale in the ordinary course of the business. When you are saying they are held for the sale in the ordinary course of the business, what we are saying for it should meet this definition for you to say it's an inventory, because you should be able to sell it in the ordinary course of the business. In the ordinary course of the business, we are saying if your business is of selling tomatoes, other than maybe carpentering, so it means your main business maybe is the license which you are going to obtain is of selling tomatoes. What we are saying, so the ordinary course of the business is selling potatoes. The extraordinary course, it means those are outside your main business, your core business. So we are saying, we are saying it's an inventory because it is held for the sale in the ordinary course of the business. If you sell a motor vehicle and your business is not of selling a motor vehicle, you are not Toyota or you are not Mahindra or any other company which sells motor vehicles. If you sell your business, that is not an ordinary course of the business, it's extraordinary course of the business. So it means you are saying to classify it as an inventory, it means it should be held for sale in the ordinary course of the business. Then in the process of production for such sales, it means it's in the process of production of such sales. Maybe you are producing some of the inventory, that will be included work in progress. That is to be consumed in the production of goods and service for sale. So it will make sure that for you to say that is an inventory, for you to make an argument that it is an inventory, it means it should be consumed in the production of goods and services for sale. Okay. What has been excluded? One, that is work in progress arising from construction contracts. But the work in progress, which is related to our core business, is okay. But this one is from construction what contracts. Financial instruments, this is covered according to our FRS 9. Biological assets, that is to point of harvest. That's usually agriculture. Partially excludes mineral and mineral products, commodities, brokers, and producers of agriculture and forest products after harvest. So you should understand that the IS2 Hello, colleagues. Sorry. Hello, colleagues. Hello.
Yes, sir.
Hello. 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 Hello, blessing. Hello,
Yes, sir.
Zitai. Okay, sorry, I had some challenges here, but we can now okay now resume our lesson. Okay, I might not be able to see some of your um, comments here because I'll be busy with the I'll be busy on the other page, which has got what we are learning. So we can answer or you can help each other there. That is a learning process. We need to assist each other there. Okay, we'll discuss this as we go on. Here it was just a brief to say as we go on. I saw some questions people they wanted to understand what we mean by financial instruments. These are some of the standards which we are going to work maybe at a later stage. That is FRS 9. That is biological assets point of harvest. That is agriculture. That is usual. It's IS what I think it's IS 41. We'll be looking on this in the next as we go up at the next level. Anyway, let's we just look here what we want to do here. Let's talk about let's go back to 4.3. That is what you were to say. Inventory includes all assets. We need to be very careful, but tangible inventory includes all assets, both tangible and intangible assets. But there are some assets which are what? Which are intangible. So we need to understand that. Like what we're saying, for example, yield for sale in the ordinary course of business. We have got, for example, fuel at petrol station, sweets sold by a cafe. Like what I was saying to say, this becomes your inventory because your business is of selling sweets, or at the fuel at the petrol station at the garage. Your business is of selling fuel. So, which means that becomes your what? Your inventory. Is in the process of production for such sales, e.g., partly piece of furniture. Maybe we find out that they are producing furniture, tables, and chairs. Find out that during that particular period, they are still to finish off or to polish off, or they are still maybe to assembly. Then it means that at the end of the day, this becomes what your inventory, that is work in progress, consumed during the production of sellable goods or services. It means You are going to consume materials such as rivets used during the manufacture of a bus, or supply such as shampoo used in hair salon. So this shampoo becomes what part of the what part of your inventory. This becomes part of what of the inventory. The cost of labor and other related expenses such as supervision and other attributable overheads cost of sale provided not yet invoiced. So the cost of labor and other related expenses such as supervision and other attributable overhead costs. Overhead costs, usually we are talking about costs such as electricity, heat and light, which makes the production to take place. For example, if you are in a manufacturing company, you need electricity, you need water. So all those costs which are going to be incurred, they fall under overhead costs. Of a say not yet invoiced, e.g. the cost of interim audit work not yet invoiced. So you should understand that the decision whether a certain items, e.g. a motor vehicle, is classified as inventory relates to the purpose of the entity, to the entity. Should the entity be a motor vehicle dealer and the motor vehicle be used by the financial manager for traveling purposes, the vehicle would be classified as a non-current asset and not as what? Inventory. Like what I said, you find that an entity has got is maybe, for example, let's say, for example, we are talking about Toyota. Toyota on its own, its main objective is to sell cars. You might find out that, but Toyota has got other cars which may be owned by the management or by the workers or the staff members. Those cars, they are not classified as inventory, but they are non-current assets. But inventory, we are talking about those assets which are held primarily for the, which are going to be sellable in the ordinary course of the business, which are there for sale. Both these cars for the directors and for the managers, they are not, they cannot meet the definition of an inventory or the characteristics of inventory because they are going to be sold in the what? They are not going to be sold in the ordinary course of the business, but they are non-current assets which should be classified. They can be classified as current assets. Okay. So before we go further, before we go to the next of measurement of inventory, do we have got any question? Do you have got any question before we go further? We need to participate, ladies and gentlemen, so that our lesson becomes interesting.
Hello, sir.
Yes, I can hear you say.
Okay. Right. Pamanga muchitsanangura zvamanga muchitsanangura ka. I
Yes.
didn't know all those classification about the inventory. Pamanga muchiti, let's say it is Toyota, if it has a fleet of car in its inventory, because its main subject is to sell my cars. So mazopa another division yekuti kana takuzonge takutarisa mota dzema managers, it's no longer an asset, it's no longer an inventory, they are non current asset. Yes, of
Yes.
course, from the background it's primarily very correct. So pamamutsanangura ndachikumbira kuti mukaisa is it a computer which we are using, mukaisa kamouse kedu kaya kapointer pane zvamune muchitsanangura, so that we can easily see kuti you are talking about the measurement of lower cost or what, kana kuti even tapa net realizable value or cost or something like. But your explanation is very clear.
All right. Thank you so much. The problem which I have now, I was trying to admit other students. Can you please help me to admit your colleagues? Because sometimes when the computer is indicating that people want to be admitted, I'll move my cursor there, then I'll try to admit the colleagues. Thank you so much for noting that. Yeah, I'll do that. But please, I'm requesting you to help your students. help your colleagues by admitting them. Okay, thank you so much. Let's go on. Yeah, it's now clear. Can you see my case here now? Measurement of inventories.
Where is it?
You can't see it.
I cannot see it.
Are you seeing the what I'm sharing with you?
We can see it, sir.
Oh,
You are seeing it. Iri papi mbotaura kuti iri pa pane pakanzi measure of lower of cost. Asi ndiri pa slide risiro.
Iri measurement of inventories up.
you can
Measurement
see
of inventory.
what he was saying. My friend was saying, if I do, can you see the pointer?
Yeah,
Yes.
mukuona pacho pakatonzi measurement of inventory ka handisi
Yes.
kutopaona ndiri kudzeyo pandiri kuona ka ndiri kuona pakanzi
Yeah.
hello
Hello.
Kupaona mudzidzisi.
So
aiwa ka kana usabva paona it's okay ndakuexplainera zvandiri kuona paslide randinaro.
all right. No.
Ndiri kuona pakanzi measure of
Okay.
lower of cost and net realizable value.
Thank you, my friend. I think you know what happened. Don't worry much.
Eh.
Maybe it's because of the network. You know, our network might be slow, but some they are seeing it whereby it's measurement of inventory and they can see my pointer here. So the problem it might be a network, but I hope you will be able to watch. We are now at 4.4 measurement of inventory.
Okay, no, it's okay. Let's go ahead. Ndinozongopaona as we go. Maybe yaramba ku screen that slide ramunaro. Hozi pazasi zasi pesi slide randina pakanzi historical cost of inventory includes cost of purchasing, conversion cost, other cost.
Tabva kudhara.
Saka handisi kutoona mai pamutsanangura ipapa.
Chiri bhuta then uchikwanisa handitika reboot then you can readmit it. It means maybe network problem.
All right,
what
okay.
Your colleague is saying, we are now at oh, that's why I was saying I'm not moving my case. I was moving it, but the problem, even when we are saying the issue of car, I was here, motor vehicle dealer, I was moving my mouse here, but unfortunately because maybe network, so you can try to reboot, then your colleague can readmit you.
All right, nditangidze tone.
All right. Yeah, correct. You know the problem of our network, but we'll be trying to cover essentials. And I'm trying to record this one. Hopefully, it might be very fruitful. Then you can share the recording. Okay, let's go on. Any other question as wait for this gentleman? Mr. Admire Sembe.
Yes, sir.
Yeah. It's good. We are moving with time, but may you please switch off the video because of our network problem. Some of you, usually the videos, they are too heavy for others.
4.4 measurements of inventory. Here am I.
Yeah, we are now together. Thank you so much. Yeah.
Okay.
Okay.
Hello.
Yeah, thank you so much.
Hello, are you hearing me?
Yes.
Hey, volume, what is happening? Okay. Ndaapo but hatisi kunzwanana manje.
Hello.
Okay, please go ahead. But yeah, iringoratidza kuti iri kustika.
Okay, maybe network yako, don't worry. If you've got your colleagues somewhere else close to you, can join maybe on the colleague's computer or the cell phone. It might be very helpful.
All right.
Okay, measurement of inventories, and inventories are measured at lower costs and net realizable value. The lower costs, the measurement of inventories of financial reporting entail the following steps to determine the costs. So here, we've got only two. One is lower of costs a net realizable value, which means that you are going to compare the lower between the cost of bringing that item into use, that inventory, and the net realizable value. So you should make sure that you'll be able to compare. So you pick the lower of that. Why do you pick the lower of between the two? What is the reason for us to pick the lower? Mr. Elias, can you remove the video, please? Mr. Elias Nyamshuka. Video. Why do we take the lower between the two? What is the reason? Why do we take the lower value, the lower figure, the cost, and the NRV, net realizable value? What is the reason for us to take the lower figure? What's the reason for us to take the lower figure? Hello? Why do we take the lower figure between the two? Let's say an inventory, the cost is $5 and the NRV it's $4. Why do we take the lower value of $4? Hello, colleagues, let's discuss.
You take it for profit maximization.
If you take the lower value, you won't get much profit maximization, because a lower figure of the value, it means you are going to get a lower profit. But what is the reason for us? So you cannot maximize profit if you are taking a lower figure, but you can only maximize profit if you take a higher figure. Last semester I did this. Okay, this one is for prudence concept, because we don't want to overstate our assets. That is the prudence concept. Are we together?
Yeah.
Yeah. So because we take the lower figure, because if we take the higher figure, it means we are going to overstate our asset. But we try to make sure that we do not overstate your asset, but you can even overstate your liabilities. Okay, let's go on. Mr. Elias, can you remove your video?
Okay, how? Like this?
Thank you. Thank you so much. Okay, so how do we do after that? So you pick the figure. If you had to be given a question, maybe in the preparation of financial statement, sometimes you can be given two figures. The examiner might want to test you whether you understand the standards. So you do not use common sense, but you use the standards. Okay, so determining the costs, these are the steps. So you need to find out the cost of that item, applying a cost allocation technique to measure the cost of inventories. Then you determine the net realizable value. Net realizable value, to find out sometimes the asset needs some repairs to bring it into assets. For example, maybe you need to sell your bicycle. Maybe your bicycle needs some tires. So you're saying net realizable value. You want to find the amount which you are going to get after maybe if incurring some expenses, maybe on bring that asset into sellable, or that into sellable. Recognize this at the lower of cost and net realizable value in the annual financial statements. So, like what I said, in the annual financial statements here, when you are preparing your annual financial statements, what you need to do, you should make sure that you choose the lower value of the cost. For example, if maybe the cost is $5 and the NRV is $4, you pick $4. The $4 is the one which you are supposed to use on your financial statements. Then you disclose the inventories in the note to the financial statements. You are disclosing to say which one have you used? Have you used the lower cost of the cost of the any RV, which so you need to disclose to the stakeholders. The stakeholders would want to know that. So this you should know how to measure what the inventories. You don't use common sense, but you need to apply the standard accordingly. That's what I'm going to do. Then let's go on to this one. Cost of inventories. Historical cost. Historical cost generally we are referring to the purchasing cost, the amount, the purchase consideration, what has been used by the entity to purchase, the amount which has been paid when they agreed. Even if you have not paid, but the agreed figure, maybe you're purchasing using the credit terms. So what we are saying, we need to understand this to say the purchasing cost, what have you, the amount which you are supposed to pay. The conversion cost is supposed to be part of the of the inventory. Conversion cost, because when you are converting that, sometimes these are raw materials. Like what we say, inventory includes maybe work in progress and raw materials. Raw materials need to be converted into goods. The conversion cost here, you've got the cost of labor, you've got the cost of the material, you've got the overhead costs. So those should be accounted for. Then other costs incurred in bringing inventories in their present location and condition, that is supposed to be included in the what as part of inventories. In the present location, might carry the inventory maybe from Dubai, or might carry the inventory maybe from Honolulu, and so on. The condition, sometimes the other inventory need to be installed. It is installation, so that so some of the inventories, maybe you can bring car parts from Singapore. Then those car parts, they need to be what? They need to be assembled. Then when they are assembled, so that you bring that car into conditions. Here, you should understand this one. The cost of inventory excludes, because sometimes the examiner might give you an additional information which includes this. They need to understand. They are saying the abnormal spillage of raw materials. So this one, it means if there is an abnormal spillage of raw materials, you don't include it as an inventory. Maybe if the question is saying 5% of the, maybe you are in the business of selling petrol or fuel here, then there will be maybe abnormal spillage, maybe of the fuel. Then the question will want to say maybe 10% is abnormal what spillage, which means that this one is not included in the what at the cost. Labor and other production costs incurred during the production process, and other production costs during the production process, e.g., production labor hours lost due to a natural disaster. Production labor hours lost during the natural disaster. For example, maybe there's now a cyclone Japheth. That the cyclone Japheth maybe disturbs the inventory, or people they cannot go to work because there is a cyclone Japheth, or other natural disaster like earthquakes. So it means this one they should be what excluded. Fixed production that are not allocated the production on the ground that normal capacity. They are saying this production which are not allocated the production on the ground that there is normal capacity instead of actual capacity was used as the basis of allocation. So what we are saying here, we need to be very careful on this one, because they are saying instead of actual capacity was used as the base of allocation. So then the actual capacity should be used in the base of allocation. So we need to understand all this to say, because this inventory sometimes you might not give in any question of inventory, but on the additional information, maybe you are preparing the financial statements. As an accountant, we expect you to deal with this, to say, how do you allocate costs to your inventory? So you need to make sure that when you are preparing the financial statement, if there are some of the events like natural disaster, which cause the labor hours to lose, how are you going to allocate this cost? How are you going to treat this cost? The treatment is so critical. So that's why we are saying we expect an accountant to understand, because inventory can cause a lot of problems. Inventory can cause theft. Inventory can cause fraud. People, they can fight. The company can go into liquidation because of the inventory is not being taken care of. So it is the duty of us accountants to make sure that we apply the correct words, the correct standards in the inventory. So what is supposed to, so we need to understand this. Some of those things we read on our own, but we should understand them. Then storage costs, unless such costs are necessary in the production process prior to further production, e.g., incomplete goods in production process that should first be frozen before the goods can proceed to the next process. So the storage cost, it has got some rules. They are saying only if such costs are necessary in the production process prior to further production stage. For example, incomplete goods in a production process that should first be frozen before they, maybe those who are in the laboratory, those who are producing chemicals, usually some of the chemicals, they need to be frozen. They need to go under maybe intensive low temperature or intensive high temperatures. So that's the reason. Administrative expense is not related to bring the inventories in their present location and condition. So we don't include the administrative expenses. Administrative expenses include like management, supervisors, and so on. Those are administrative expensive. Those are management which manage the organization. So which not related to bring the inventory to their present location and condition. So we need only those which are directly related to bring the assets into the present location. Selling expenses. If you are selling those selling expenses to sell those inventory, does not mean that you should include those as as a part of inventory. Selling expenses, you cannot say you value your inventory by including the selling expenses. No, that's wrong. That's why when you are preparing our financial statements, you find out that on our own case, we say that is our purchases. Those purchases are part of our inventory. Then when you are adjusting there, we don't include the selling the selling expenses, like the carriage outwards. And they are saying inventories, not cost of sale. Therefore, although abnormal spillages and under or over allocated fixed overheads are excluded from the closing inventory, they are included in the cost of of sales. They are included in the cost of sales, but they are not included as inventory. According to IS2, IS2 relates directly to inventories and indirectly to cost of sales. So it means those ones which were saying like abnormal spillage here, maybe there's abnormal spillage. Usually it can happen in the industry of fuel. Then there's under or over allocated or fixed overheads. You can do this one under or over allocated or fixed overheads. Fixed overheads, we are talking about maybe rent. Those are some of the fixed overheads. I excluded from the closing inventory, but they are in the cost of sales. They need to understand it. And so let's go on to this one, the purchasing cost. Purchasing cost, when you are purchasing your inventory, what is supposed to be included here? One, the purchases price of finished goods or raw materials should be included. If you go to South Africa and you buy goods there, should maybe in the business of selling television sets, which means that you should include the purchase price, how much have you paid in the acquiring of that those televisions in SA, South Africa. Those are the purchases. If you are buying maybe raw materials, maybe in the business of a carpenter, if you're a carpenter, you need to account the cost of buying nails, of buying planks, and whatsoever. Then import duties. Import duties maybe like what I said, maybe are purchasing goods from South Africa. You need to incur what you've got import duties. That import duty, which are going to incur at the border to Zimra, you should understand that import duty is part of the what? Is part of the import duty. That is the part of costs to add them. Other taxes, other than those subsequently recovered from taxing authorities. So if the tax authorities give you, for example, Zimra might exempt you or remove those taxes or refundable taxes. So which means that those refundable tax at the end of the day, such refundable tax, they are not part of, should not be included, they should be deducted. Transport costs, if you hire somebody to carry your television, maybe from Dubai, or you hire a ship from Dubai, such transport costs should be included at the purchasing cost. The handling costs, you need sometimes agents, you need other people to take care of these handling costs. That also should be included as part of what? Of the purchasing cost. Then other costs directly attributable to the acquisition of the inventories from these assets, from this cost. Other costs directly attributable to the acquisition of the inventories. Directly attributable. That is, we are saying that cost is directly part of the what? Of the acquisition. Then from this cost, the following are deducted if included. Like what I saying, should include trade discounts should be deducted from this cost. Rebates and other similar items such as subsidies and kickbacks on purchases. So it's very important to understand that. So you need to understand all those items. Those are the key points which are supposed to include in your inventory. To say how do you measure your inventory, that purchasing cost, you need to understand this. That is very, very, very critical. Very, 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 very critical. Okay. Let's go on to this question. Let's go on to this question so that people they can understand what do we mean. Who can read this question for us? You guys, please, can you admit your colleagues there? Hello, who can read for us?
Hello.
Welcome. Hello.
It's example. Is it question example 4.1?
Example 4.1.
All right. Alpha Limited was recently incorporated and registered for VAT. Goods were purchased on 2 occasions during its first month of business. The details of the purchase transaction are as follows. Transaction 1. Goods were purchased from a supplier who wants to establish a long-term business relationship with Alpha Limited. With this in mind, the following terms were laid down. Item number 1. The purchase price of the goods before any rebates or discount is 703,700, is it million rands? That money, okay? Including VAT left at 14%. Again, Alpha Limited will receive a 10% volume rebate on the purchase price of the goods. Alpha Limited will receive a further 10% settlement discount if the outstanding amount it is settled within 30 days. Transaction 2, goods were purchased from a foreign supplier, in bracket, the transaction was denominated in rands for 400,000 rands, excluding VAT. Ownership of the goods was transferred to Alpha Limited upon delivery at the harbor. Alpha Limited entered into a contract with an independent transport company to transport the goods from the harbor to the entity's premises at a cost of 50,000 rands. Right. When the goods are inspected by Alpha Limited's foreman, it was discovered that 30 of the 300 containers had suffered water damage during shipping in South Africa. Following negotiations with the supplier, it was agreed that the goods would be returned to the supplier. The cost of the two purchase transactions would be calculated as follows. Transaction 1, purchases price.
Okay. So
Uh-huh.
here we will continue, don't worry, just hold on. So here what we are
All right.
saying, if you look at the basic here, we look here to say the purchase price before rebates or discount, it was $703,703.70, and including VAT left at 14%. Then they are saying Alpha Limited. So what you need to do here, you need to go to the basics of IS2 to say what does AS2 talk about the treatment of the VAT? What does AS2 talk about the treatment of the rebate? Alpha will receive the rebate. VAT, how VAT is treated? So that when you're going, the question becomes is let's discuss.
VAT taona kuti inoederwa kai because it's part and parcel purchasing price. Then rebate inobviswa because it's a allowance yatinenge tapiwa kunzi no, your exemption for such amount.
Yeah. Then next.
Ndeyechiyo
Settlement discount.
Settlement discount.
Yes.
From the word discount totongoibvisa, but the phrase settlement zvinorewe kuti settlement discount.
Why if the outstanding amount it is settled within 30, but if you pay in full, if you pay that amount,
okay, iyo
you are going to earn a discount. I'm saying if you pay me the full amount within 30 days, I'll give you a 10% discount. Hello? We are together. Hello?
All right. I
all right. If you pay and if you make a condition, the condition of paying 30 days and within 30 days, which means that maybe even if you pay at day 1, it's okay. Until to day 30, you can be granted the discount. It's okay. Let's go on. Transaction 2. I think this one becomes simple from his explanation, so that at least when you're going to the question, you understand what do we mean. Then transaction 2. Hello, colleagues. Hello.
Sorry, Doc.
Hello.
Good morning, Doc.
Hello, Doc. How are you?
I'm fine, thanks. Sorry, I was late to join the class. I was traveling from Harare to Bindura. Sorry for the disruption. I just wanted to confirm if you are recording this lecture, because I can see there are quite a number of students reporting that they are having network challenges.
Yes, I'm recording it.
Thank you so much.
I hope you to allow me, but I'll try to download it.
Okay, sir. Okay,
Let
thank you
me
so much.
verify here for more. Let's find out here. Yeah, it's recording.
Okay.
Yeah, yeah.
May I kindly ask students to remove their videos so that we can increase the bandwidth?
Okay.
Thank you, Doc. We may proceed.
Thank you so much, Dr. Pamba. Okay, so we're in transaction 2. Who can explain transaction 2? I think the transaction 1 was well explained. Transaction 2. Any volunteer? You unmute yourself, then you contribute. Hello? Hello? Any volunteer? Okay.
Doc, you are very clear. I can hear you loud and clear. So I think maybe students have got to confirm. Some are muted, so they may not actually be conversant with the system where to unmute and mute, because I can see quite a lot of them are muted.
Can you, if you want to talk, just unmute. There was a student who was reading here. Who was that? Who was explaining the first transaction? Maybe unfortunately was booted out. Okay, so I think I was explaining. He was asking about the settlement to be the discount. When I was saying no, the discount, yes, if you meet those conditions of paying within 30 days, then you the entity can receive a discount. Then transaction 2, let's talk about the explanation. They are saying it was discovered that PET of 300 containers suffered water damage during shipping South Africa. This one, we said, is it a natural disaster or what, or abnormal loss? Is it an abnormal loss or what? Colleagues? Is it an abnormal loss?
Yeah, it is an abnormal loss, I think.
Or you think it's an abnormal loss? Why is it an abnormal loss?
Yeah, because of like there was damage from like containers that suffered water damage. So that is an abnormal loss and it is excluded actually.
Yeah, okay. Thanks for that contribution. Let's all go on. So if you check in our answer here, we found that transaction 1, the purchase price that is given, simple, 703,703.70. Then if you go to the clause of VAT, they are saying here the purchase price of goods before rebates or discount is $703,703.70, including VAT left at 40%. Then they are saying here, Alpha will receive a 10% volume rebate in the purchase of the goods. So they are saying this one was including what? VAT 14%. So they are saying VAT input, recoverable taxes. So we've got a VAT what? Input. So the recoverable tax here on this situation, since it was 14% of this one, 14%, like what we're saying here, we have got a situation whereby we are saying if our previous is 14% of the amount it has been already calculated of the number which we know. So the formula here is just to add what? To add our denominator, which is 100. 14 plus 100 becomes 114. So it's 14 over 114. Example, what we know, what we understand when you are changing markup to margin, we add only the what? We add the numerator plus the denominator. So here we are saying 14 plus 100, 114. But we don't add the numerator does not change. We remain at 14. What changes the denominator? Then we get this one. Then purchasing price excluding VAT. Some they can take a long way. We want to start by removing the VAT at first. So then you can start calculating other items. But this is the simple way. When you want to go back, when you were before, to go back before VAT, the original, the purchase price before VAT, you just add what? You just saying 14 over 100, 14 plus 100, that is 114. 114, your denominator changes, but the numerator does not what change. 14 will not change. What changes the denominator to go back where you were. That is a simple mathematical way. I think we understand this concept from the previous mathematical background. Then you get this figure. Then the rebate deducted from the cost of inventories. Why did you remove the VAT? Because here they are saying Alpha Limited, we removed the VAT because of this clause. Maybe you might think that there is something we removed the VAT because of this situation. 10% volume rebate on the purchase price of the goods. We removed the VAT because we want to remove the 10% of the purchase price, not the 10% of the price which include what? VAT. That's why we remove the VAT. That is the reason for removing the VAT. Because 10% should only related to the purchase what? To this purchase price. Are we together there? Why did we remove the VAT there? Hello, class. Are we together? Why did we remove the VAT first?
Yes, sir.
Okay, thank you. Because we cannot calculate rebate using 10% of 70 becomes wrong. Because they want what? Only the purchase price. Thank you so much if you understand what the reason for that. So that you can understand why we remove it first. Then we say 10% of 617. So this one was the purchasing what? The purchase price. This one is our purchase price. So the 10% of this, then we get this. This is our what? Our rebate. Then here, so amount payable to suppliers excluding VAT, that is 5555 something. And then if you pay, we say if you pay within 30 days, it means you are going to this amount is going to be reduced by 10%, as we all say, to say we should remove that. So the 10% of this amount, that is 55,555. This one, because we say this should be removed, rebate, then the discount should be removed, they reduce. Then the amount to be recognized at the cost of the inventory is 500,000. That is the amount which to be recognized as the cost of what? Inventory. According to IS2, the standard. Not our own formulation of standards which we do these days. But as an accountant, we expect you to have a minimum knowledge of this so that you understand what is the cost of the inventory to be recognized. Okay, let's go on to the next one. That is transaction 2. Transaction 2 purchase price excluding VAT was 400,000. Because this one is clear, excluding VAT, so VAT is not part of it. Which means that this lesson, our labor here, our labor of calculation was simple. So the delivery cost, it was said the delivery cost is supposed to be included. If you come to this, the delivery cost, that is transport cost here. So it should be included here as part of the inventory. So the delivery cost is 50,000. That's why we included 50,000 here. Then the amount to be recognized as cost of inventories is 450,000. That is clear. But they are saying here 34 of the 300 containers it suffered water damages. 30 of the it was covered that 30 of the 300 containers had suffered water damages during the shipping South Africa. So which means that how many, what was the following the negotiation of the supplier to agree that the goods would return to the what? To the supplier. So here they are saying 30 of the what? Of the 300. So here we are saying the purchase price was what? 400 what? Thousand. Which means 30 for every 300, which is 30 over 300 and 400 what? Thousand. Hello? So it's 30 for every 300. Of how much? Of 100,000. Then you've got 40,000. So the delivery cost will not be refunded. So cost of goods returned, that is 40,000. So amount to be recognized as inventory is 410,000. Like what we said, if you do an abnormal loss, that will be deducted as a what? As an inventory. So it will be included on the what? On the cost of goods sold. So that's why I'm leaving 40,000. Because it's 30 for every what? 30 for every 300 containers. Okay, so I think this one is clear. Any question? Any question? Okay, because we want to cover other areas. Then we said inventory does not only the goods which are in the stock. Let's go on to the next one on the conversion cost. We said here, we talk that inventory is what we have. For example, if you are in the business, we think that maybe inventory is only sweets. But let's say it's a manufacturing company which manufactures maybe it manufactures tables. The company will incur the following: one, labor, because that company should incur direct labor. People who are going to make sure that those tables are into what? Those tables are going to be molded into better shapes. Those who are going to do the welding and everything, the carpenting, they need direct labor. It's part of the inventory. Variable production overhead costs. For example, electricity is part of variable production overhead costs. Down. So fixed production costs, they only need a fixed production overhead based on the normal capacity. Okay. So that is very, very, very important for us to understand that. Then they say IS2 adopts the effect of full absorption cost. So don't worry about this one. So you need to understand these 3 elements. To say we need to have direct labor, variable production overhead cost, and fixed production overhead cost based on normal capacity. That is very critical. Let's look on the question here, 4.2. Question they can make it to understand. Who can now read for us? Who can read for us?
ndeipi yacho iyoyo iyi 4.2
Yes, 4.2.
all right I shall read rega ndibvewo pane noise apa vanhu veda vanenge vachingoita noise. Yes, Delta Limited is a pharmaceutical company. The company uses the 2 raw materials, X and Y, in equal portions in a chemical process that produces 2 main products, headache and headache, and a byproduct, coke, which is sold for fertilizer manufacturers. Cost to sell are immaterial. One production cycle produces headache 3,000 units, headache let's say 1,000 liters, coke 2,000 liters. The sales price for headache is $25 rands per unit. For headache, it is 15 rands per liter, and for coke, it is $50 rand per liter. The total cost of production joint cost is 60,000 rand per cycle. You may assume that the value of the coke inventory is immaterial. The relative sales value of the main products and the byproducts can be calculated as follows: sales value. Then there's a portion of rands and percentage. Shall we proceed? Hello? Hello? Hello, guys, are you following?
Proceed, Baba.
All right.
Yes, we are following. Baba.
All right. Headache, it's 3,000 times 25, maybe no unit, $25, 25 rand. We get 75 rand at a percentage of 83%. We end up a product yacho. It's a headache. 1,000 times $15, 15 rands. We get 15,000. As well as 16,000, 67%. Coke, 2,000 times 1,50 rand, we get 3,000 up. The cost of production, when I total and then the cost of production of the joint main products is allocated on the basis of sales value. The net realizable value of the byproduct is deducted from the main product. Allocation of cost. Here it's 60,000 rands minus 3,000 in bracket times 83.33%. Headache is 60,000 rands minus 3,000 times 16.67. Total cost zvichibva zvangoramba zvichiedwa pagross up in rands. So the comment, byproducts that are not material, as in most cases, may be measured at the net realizable value. This may result in byproducts being valued at above cost. If net realizable value is higher than the actual cost, if it can be determined, this is a departure from the basic rule that inventory should be measured at the lower of cost and realizable value. It seems, however, that the objective of IAS 2 is to provide an expedient and cost-effective solution and recognize a general concept practice in the measuring of byproducts. This departure can also be justified as international financial reporting standards and are applicable to material terms only, and the byproducts amounts are normally not material. Then I think ifokoma tu yapera. About the explanation now.
Explain naika.
Aiwa ko my explainer wakaini ndabuda kane network amuna kuzoona era.
My explainer that imbo explain naika.
Oh as a group handiti ngati teitone as a group tuone kuti tinobuda nechi conversion kai. Where are the others?
Those are named Songana Zomu industries. That is what you meet in the industry. So they will be looking at you to make sure that if you get the job at that labs, they will be looking at you to make sure that you help them. Because at that labs maybe are producing paracetamol, then maybe are producing maybe the ants or the other medicine. So they will expect you to make sure that you assist the financial director.
Okay, allocation 36 Okay,
so you're saying there are two raw materials, that is X and Y, in equal portions, that is 50-50. In a chemical product that produces two main products, that is headache and headache, and byproduct coke, which is sold to fertilizer manufacturers, cost to sell are immaterial. If they are saying they are immaterial, it means they are not part of this problem. We are not. If something is immaterial, it means it does not make a significant influence in the cost. It means they don't make the significant influence in the cost. One production cycle produces, that is 3,000, that is 1,000. But this one is a byproduct, and we should be very careful. This one is a byproduct. A byproduct is a product which like a waste, but it has got a value. Because this is not a main product. For example, if you are producing sugar, you find out that there are some byproducts such as ethanol and molasses. But what is the main product which you want is sugar. So the main product which you want here is headache and headache. But the calcium becomes a what byproduct. So you need to be very careful how are you going to treat this byproduct. Then the sale price of headache. Can you mute please? Can you mute please?
Hello, Kwekwe Kioski. Kwekwe Kioski.
Hello, can you mute?
Kwekwe Kioski. You are making noise. Please kindly mute. Those in Kwekwe Kioski, kindly mute. You are making noise. Vanhu vari kukwekwe kioski muri kuita noise.
Okay,
Vaburi-
doctor.
Vaburitsei chiremba.
Kwekwe kiosk, yeah, is now mute. Okay, so here we're saying because this one is our byproduct. We're saying the sale price here is $25 per unit, and headache is $15 per liter, and for calcium is $1.50 per liter. But if we say this one does not form part of our main inventory, though we are going to delete from it, the total production joint cost is 60,000 per cycle. You may assume that the value of calcium in material. I'm saying in material, we are saying it is not what. So the relative sale value of the main products can be calculated by this. So because here we say 75 over 90 times 100 to get this one 15 over 90. That is so at the end of the day, the calcium, since it is immaterial here, that's why here we're not including it on the sharing of these costs, on the sharing of the costs, because they are saying it's immaterial, which means that it doesn't have a significant changes. So on this situation which we have here, you find out that if you say 75 divided by 90, you get 83.33. 15 divided by 90, you get 16.6, then 100. Calcium was left because we said it's immaterial, it's a byproduct. Then when you are sharing then allocation of cost, the cost was 60,000. Then it's now 6,000 minus the 3,000 there times 83.3. They take the same thing, 6,000 minus 3,000 for calcium times 16 something. Then the calcium, it will have the cost of its own of 3,000. This one, it's like a net. It doesn't change. Then all in all becomes what? 60,000. Any question? In account, when we're talking about material items and immaterial, what we are saying, material items, it means they've got a significant influence in the economic decision of the business. But if something is immaterial in the business, it means it doesn't have a significant influence in the running of the business or the economic cost of the business. Okay, let's just look what we want to do now. We can just take a small break. Then when you come on, we look on when you return, we'll be looking on the issue of the cost allocation techniques and cost formulas. So how many minutes can we take for a break?
30
Or can
minutes.
continue?
Let's continue.
Pauda ka break wakomana dakaendesa mvura kumba wakomana.
Aiwa mana nguva mana isi vamwe toda kutobuda
Wakomana
saka
hati inori bhuku iri tisendereka bhuku iri murairidzi tite tichizorifeya bhozi muri kuona
zvakasendwa
Ndakupai bhuku ireri.
Regai ndigobatsirwe nevamwe vangu ndirione because it is very useful. Ndoda kuti timboite kakabreak kana keziti 20 or 30 minutes ndichisvikawo nemvura kubreak nechimwe.
Aiwa. Kuti adingo continue tangopedza.
All right, listen. I think because of our network, and let's just say about 5 minutes, then we finish off in time. Then we can go and look for water. If we have got a problem of network, of electricity, and anything can happen. You know the situation in which we are.
Yeah, tiri panetwork ipapo ini hanga tinoziva tichitaura nezvei tatiri kutaura nezvei.
All right, let's meet after at 10 o'clock. Let's meet at 10 o'clock.
Okay, murairidzi Davis.
Umbomanya notora mvura yako iwe.
Thank you, stay.
Murairidzi. Murairidzi aenda. Davis.
Bhuku ritaura kunzi rakakandwa papi iri bhuku iri bhozi
ririmo mugrupu manyu tikapinda mugrupu ravakaningirina ririmo rine 100 inonzi rine mapeji 1067.
but makurenga
yacho yakamira
maprazi bhuku iri riripo here pamaprazi guys pane angandibatsira here tinoda kuziva kuti titaura
kutaura nezvemainventories
yarohwa zvemhando inventory kuda tatanga kudzidziswa kunzi chinombodzi inventory chacho chiiko kuti inzi inventory yamushop pane zvinhu zvinosanganikwa nazvo vanana transport cost patinonohodha paipai tinosangana nemabrokers saka zvanga zvichiiswa into infact kuti zvinoafecta sei inventory kana zviri zvimwe zvinhu zvokuti taenda kunohodha tashandisa transport yekunohodha unoedhera painventory kana kuri asiwo zvakafanana nekuti tomboti for example zveaccounting kana for sales kana takuita zvemasales hatingaitika masales they are part and parcel of inventory. I think izvozvo zvimukapuhwa kabhuka akaiva munozvibata murungu
kuva zvanga zvichinzi maconversion anzi inventory conversion ndezveizvi.
Alright, inventory conversion manje kanyaya yekuti painventory paipai ka kuti isusu tinotsvaga inventory yedu kuti tinototsvaga ma-inventory yedu maybe they are raw materials maybe tiri mu-manufacturing account and green company saka tiri kuti conversion is labor ma-handling expenses for example zvinhu zvedu zvinoda storage handiti saka these are panozoda conversion yekuti tizive kuti labor iyoyoyo tailoketera mari yakawanda sei ko zvimwe zvatanga tichisangana nazvo tinozviconverta is something like my expenses my overheads expenses you see something like that tikazopiwa chibhuku icho tozvirova izvo
I think chibhuku chinoda kukorodzwa kukandwa futi vanhu vakuchidownloada but I think pachakatumirwa
saka kubva kutangira chibhuku ichochi.
Thank you sir.
Ndepera hapo shamari. Warise mata then. Shamari, ndaka basa rakandiwandira zvisingaiti. Isana.
Okay, colleagues, thank you so much. Hello, colleagues. Hello, colleagues.
Hello,
At
sir.
work,
We are here.
at work,
Yes, sir.
at work, can you are very handsome. Can you remove your video? At work, can you remove your video so that at least with our networks it becomes very difficult.
Samangamboti tombo break asati ya break kani.
Zakwana zve 10 minutes naye mwanangu.
Zakwana.
Yes.
Ndachitiyo chakango break. Okay, it's fine.
Mamuchita basa rakanaka chaizvo muchidiscuss.
Imboise video tione face yako Zakwana.
Ndisero jawa.
All right, let's go on. And let's go on to this critical again application of cost allocation technique and cost formulas. That is very critical. I'm going to share with you this book and the recording so that at least you can able to benefit well. You can read this book at the comfort of your home. You don't read everything. You read the course, what we need to learn this, what we are going to do this semester. Other than the actual cost of inventory discussed above, what other techniques can be used to calculate the cost of inventories? The following are possibilities: the standard cost method and the retail method. What do we mean by the standard cost method? Standard cost method involves working with expected costs based on normal level of operations and operating efficiency measures, and entails the application of predetermined information. That is what we know to say under normal circumstances. What is the cost of that inventory? What is the cost of the suites? What are the costs maybe of producing these desks or chairs or anything under normal? not abnormal. So that's why I say under normal level of what? Of operation. So it's critical that our predetermined costs are being based on the normal levels. So it's very critical like that. The method allows management to monitor and control costs. Standard costs can be used for convenience, such as measurement of even determined in the way approximates. A regular of the standard cost is required where conditions changes. So this one helps for the management cost. As an accountant, if you're using the standard costing, you can able to control and monitor and make and investigate when necessary. When you're investigating, you can investigate costs if they are high. What are the possibility? What might have caused those costs to just move, just to be high? Or if they are low, what might cause those costs to be lower? Then you can make a informed decision then by monitoring. So that is the advantage of this standard costing level. So you can see on the normal what are the costs and so on. Then the retail methods. The retail methods, this method is particularly suitable for entities that do not maintain complete records of purchase and inventories. Like these days, you find out many companies, many firms, many small firms, those of Mseyamas, some of them they do not have complete records. So what is happening that inventory is measured at the end of the reporting period by determining the selling price of the inventory, which is reduced by the average gross profit margin to determine the approximate what cost. So suppose the inventory of a sports shop valued at selling price is 980,000, but it is not saying you should take 980,000. This is a selling price, not cost. If the owner normally adds a markup of 25% to the cost price of this product, the retail method is applied as follows to calculate the approximate cost of inventories. So we are saying this is selling price 980 and this is 25% markup. All things being equal, we are not allowed to say a markup against selling price, because markup is related to cost and selling price it work hand in glove with the margin. So you need to do like what you say 25 plus 100. If you are now changing markup to margin, you add the numerator and the denominator, which is 25 plus 100 becomes 125. So it becomes what? 125 here. Because they are saying we want to find out the cost here. Instead of going the longer way of saying 980 minus minus here 25 over 125 times 980, you get the same answer. But here you can take the shorter version, whereby saying it was 100% full, but it has been affected by what? 25%, 100 over 25 times 980, 784. Those are, I know from mathematical background, it's not a big problem. So 784 becomes a what? A cost. Because 980 is a selling price. This cannot be a cost. Both selling price and the cost is different. But some people, they use the selling price as their cost, which is wrong at all costs. Okay, this one is simple, but these are other various techniques which can be used. For example, what I'm saying to say some people, they don't have what? Because of the situation which we have at the moment, you find out that some people, they don't have a proper accounting system. So we end up using the retail method. So if the question says use the retail method, you should understand how do we do it. If you are given the selling price, then you apply what? The markup. If you are given the markup, it means you should what? You should not say 25% of this one directly. It becomes wrong. Then the cost formulas. These are very important. When usually a company has got inventory, the company will try at all costs to use the formulas which are helpful, which make the organization to prosper, and which make the organization to maximize profit and the organization to achieve its objectives. So here the cost formulas according to IS2 are S2.23 to 227. We have got the FIFO, which is first in, first out. This one we know even at our homes. You start by consuming. If you buy 2 loaves of bread today, then tomorrow you buy another one. Generally, you try to start by eating the first one, which was in the first which you purchased today. Then that's the loaf of bread which you use at first. So first in, first out. That one, even if you are selling your inventory, you are saying the one which you purchased at first, it should be sold first. That is what we are saying. First in, first out. If it is at the workplace, maybe the management want to retrench other people, then they say first in, first out, which means that those who who arrived at the workplace earlier, they will be retrenched. So inventory is good again, especially on perishable goods. First in, first out is got an advantage. But on goods like wine, which they say maybe wine it matures with time, maybe FIFO might not be that correct. Then weighted average cost. This one we are finding the weighted average cost of all the goods which are there, which are in the stock, which are in the inventory. Then we weight the average cost, whereby we are multiplying each lot times the price, each lot times the price. Then at the end of the day, we find the average cost. Specific identification. Then note that last in, first out, LIFO. Be very careful. LIFO is not allowed. Last in, first out is not allowed. Be very careful. Are we together? Class, are we together there?
Yes, sir.
LIFO is not allowed.
Yes. Yes,
Yes,
sir.
yes.
Together.
According to, you don't use your brain and use the standard according to IS2. For the standards are there to make sure that there is the harmonization, there is uniformity, there's compatibility, so that it enhances reliability. So it's very important to have standards. That's why they have standards. So don't use your brain and act using your brain to say LIFO should be used. Unless if you want to do a creative accounting, it's okay for you. First in, first out, I've explained this to say you start by what? You start by selling, removing the old inventory. Then the oldest should be what? Should be moved out. Then the new should remain. Let me explain this one. Weighted average method. This one I think is simple to understand, because it's practical in most cases. Then the weighted refers to the fact that the number of items is also taken into account when calculating costs. The weighted average is calculated either after each purchase or periodically, depending on the circumstances. So you can do maybe after you purchase another item, then you apply it. Or maybe you can say you do it maybe after 3 months or 1 year, depending on the organization's accounting policy. So this one, the S2 gives the organization a space to say whether you want to do after each purchase or periodically. Depending on the particular, this basis, just as in the case of FIFO, is appropriate interchangeably inventory for large volumes. Let's look for the 4.7 example of this one. Assume that an entity purchases 100 units at 16 rands. Each purchases a further 300 units at $16.50 each. The average price is not 16 16.25 rand. That is 16 rand plus 16 divided by 2. Why this is wrong? Why this is wrong? Why this is wrong? Why this is wrong? Okay, because there is no distribution of weights here. Because what you are supposed to do is supposed to have 100 units. It's like you are saying these are 2 units. 1, 1, they are equal, which is wrong. So it will be very important to know that when you are using weighted average, we say 100 times 16 plus 16.50 times 300. Then after that, we add. After that, we say at the end of the day, what we have here, we now have 400 here. Then you say 6550 divided by 400 units. Then you get this one. So that is the idea here. You should multiply the number of units times the value. The number of units times the value. Then you get what? The average. Because now we have 400. But it means the value for the 400 is 6550. That's the value. Then let's look at 4.8. 4.8. Who can read 4.8 for us and explain 4.8? 4.8. Example 4.8. Who can read 4.8? Hey, Tanatwa. Or Shelton. Shelton. Yes. Can you continue? Can you continue? Yes, I can see your hand. Continue. Just
Thank you. Thank you, sir. Sorry to take you back. I only want to ask you about the weighted average formula. Is it only applied to the inventories that are in to the purchases that are in inventory, regardless of the date or the type of material? Hello, sir. Are you hearing me, class?
Yes, tiri kunzwa mandevu. Takatomirira kuti zvamabvunza zvipindurwe. Nyaya yekuti vamwe tiri kutovharwa.
Seems the doctor is muted, so.
Ungamanzi muerenge mazakapu mukuru.
Okay, I was saying, for us to understand the FIFO in the weighted average, let's do example 4.8, because this was too simple. It was only for two batches. So, Mr. Mandev, you can read for us 4.8.
Okay. Application of cost formulas for perpetual and periodic inventory recording systems. Romeo Limited has incurred the following inventory transactions during the month of October 20.
Maybe 2014.
Okay, on 2014. Item 1, on 1/10, that is
It's 1
October.
October.
Yeah, 1 October opening balance. Units were 200. You actually what does that mean? 20. And on 2 October, sales were 120 units, 40. On 5 October, purchases were 300, 24. On 15 October, sales were 200 at 48. On 20 October, purchases 150 at 30. 25 October, sales 150 units at 50. The cost price of inventory is determined using item 1, the FIFO method, item 2, the weighted average method. Thank you.
Pane azivawo kuti RU zvinorevera, mungagona kutibatsirawo.
Asi marands per unit here.
Yeah, and I think it's price. And umutanya price because to teach it 208, like zvanga ingutaura 850, 8 what, takazitengesa or takazitenga mari. I think it's price. Zotaura nezvayo.
Anogona kuita kana marubies izvo hazvo denomination yemari handifungi kuti chiri important sterek chinongori important kuziva kuti iprice.
vanhu vekuakaunza vasi kubhadhira makambani asi zvinoda kuti zvizokonekta iwanda kuti vanoda kuti vanhu vashandise kana holiday vakusemanya
Hello, class. Hello.
Hello, Dzidzisha. Hello.
Okay, all right. This one was asking to say this one is 20 rand per unit, and it is the same as $20 per unit. What is important? The reported current is what? It's the rand here. So what we can do on this situation? Let me try to. I think I'm now have some echoes here. So I'm trying to make sure that I remove these echoes. Sorry, there was a problem of interruption here. I'll Hello.
Hello.
Yeah.
Hello, sir.
Yeah. Sorry. I'll try to reload on the screen. The person I had faced some problems here of internet. Okay.
That's okay, sir.
It's now clear.
Yes, sir. Yes, sir. We can
You
see
can now
clear.
see the slide.
Yeah, sir.
Hello.
Yeah,
we are now seeing.
slide.
All right.
Yes.
So here, what we are saying, like what we're saying here, the FIFO method, first in, first out. The opening balance 200 units per 20. Then the sales 120, which means that on this date, on the 02 chain, how many do we have? Let's say 2 October. 200 minus 120. What will be the inventory in the? What will be our inventory? The balance. This is simple mathematics.
80.
If you sell, it means we are going to remain with 80. Then you purchase on the 5. And
8
when you
and so 8 we 80.
yes, you can explain.
Yes.
Okay, can you explain this table? Hello? You were doing well on the background. Can you explain?
I think network yanga ingokata-kata ana zvangaitaura zvanyanya.
Oh, I thought he's doing well. Okay, anyway. So we find out that the purchases on the what? These purchases were on the 05, there were purchases of 300, which means that we now have 380 in our what? Inventory. But now 300 were at $24 and this one was $20. What it means? It means the 80 remaining, if it is average cost, the 80 remaining should be 80, the balance 80 here times 20. Then the other, the 300, it would be 300 times what? 24. On this date, if you are waiting each and every what after every transaction, then we say 300 plus 80, 380. Then we add the total value. Are we together?
Indasara pamari apo kuti like sure pamaizo 80 to 20 300. Yeah, ndauzo.
Handiti akatengwa ne20 200 units handika were purchased with 20 rand handiti. Then we sold 120. 200 minus 120 is how many?
80.
So 80 times 20, because this 80 should be valued at 20, not at 40, not at the selling price. We don't value stock at selling price. We value stock at cost. We go back to the basics.
All right.
Okay. So the 80 should be valued at 20, not 40.
Osaka tinovhaliwa inonzi inventory yedu yetichi pamasales at cost.
And after this 200 minus 120, what is there in the inventory now?
Inenge ya 80.
So 80 times 20. What this
all
is
right.
one we should express everything in monetary form. 80 is just in the number of units, quantity. 80 times 20.
All right, what? 1,000, what?
You see, then you go to the next and you purchase on the 500.
Yeah.
300 and then 300 at 24. Then it means at 5, our value of inventory is 300 times 24 plus 80 times 20. If you get that figure, we say 80 plus 300, that is 380. Then you say the figure which we got the value divided by 380, that is the weighted average.
Like, but no
sorry, I'm lost.
But no age.
Okay.
And these number purchases are, you see these purchases. These purchases. These purchases, they are 300 and at 24. And this, the balance on this date, before we do purchases, they were 8 and at what? At 20. You see? So we are saying 80 times 20 plus 300 times 24 to get the what? To get the inventory. The value of the inventory.
For 80.
Are we together?
Say 80 wamurutaura ina ndisikuona pari kubva ini.
80 is difference between 1
between 150 and what?
Kana ukatengesa inzwai. Ukatengesa chinetika. Kana une staff 200 units, then you sell 120. What's going to remain?
Takatenga zvinhu 200 tatengesa zvinhu 120. Saka isusu ne-80 ndopabva 80 at 20.
If you sell it out, the movement of inventory, if you sell, movement is going out. Are we together? Hello?
Yeah, Sese.
Then it's weighted average method, Andika. It's okay. Takuta chinzwa manje.
Can I read FIFO and it? If FIFO is first in, first out, so which means that we are going to value. We don't. We just value to say the value of the stock. We just say 80 times what times 20 remaining. And this is, but if it's FIFO, we continue on and do the end of the month. Then we say 80 remaining year. Then the next sale on the 15 was 200, and so the sale was 200. We start by replenishing 80. 200 minus 80 Leana, and this is FIFO. Just less zero, which means that for one chain
Apana kitchen.
1 October, we now have 0. And then here we have got what? Shortage of 120. Are we together? Shortage of 120 is going to be taken from 300. Then you say 300 minus what? 120.
120.
Are we together? Yes, because we are saying 120. So we now have what? We now have 300 minus what? 120, which is what?
180.
180. Then here we sell again 150 on this date. But what about sales? If you are now selling 150, it means we start by 180 minus what? 50. That's why we are now left with 30. So from those 30 which has been left here, those 30 they are valued at 30 times 24. And 150 has not been what? Sold times 30. So on FIFO, it means our inventory at the end of the month, value of inventory, it will be 30 times 24, the balance here, and 150 times 30. Are we together?
Like in the question, umra ko apa pakanti kuFIFO kutongoshandisa purchases chete.
Visa purchases akapinda, for example, and purchase was 200 here. My sales of 200, but because of the FIFO rule, we cannot say 300 minus 20 because already there was a balance of 80. Our inventory was 300 plus what? 80, 380. Because of here only 200 minus 120, there was a balance of what? When you purchased on the 5, there was a balance of 80. You understand? So we now have 380 units. But because of the FIFO rule, we need to start by 200 minus 80. Then we finish off the what? The inventory which was purchased earlier. Then the 120 should be what? 120 should affect the purchases of what? 300. Then 300 minus 120. Then we have got what? 180. Do you understand? Then we purchased 150. We now have 180 plus 150. But since we have got the sales of 150, we are starting by 180 because it's FIFO. We are saying 180 minus 150. Then we have got what? 30 remaining. So 30 remaining, they are valued at 24. Then 150 was not touched at 50. So it's 30 times 24 plus 150 times 50. Sorry, 150 times 30. Sorry.
Alright, yeah, zvazva clear. Like totanga tatengesa 120 dzinzi asa pa 300 and patinotengesa musi wa 20. Then patotengesa pamwe pasara 30 because musi wa 20 watatengesa zvinhu 50. Then 30 yotonoidzosera pamapurchases emusi wa 10 at 24. Then emusi wa 20 hatatotengesa, which means mustock ichirimo ya 150 at 30.
Aya ndio musi wa 5 and it's 30 aya. Saka anovalue at 24.
Then
I asina kutengesa anovalue at 40, 50, at 30, sorry.
At 30 emusi wa 20.
What 20 is.
All right, zvanzwisika.
All right. So as you
masales emuswa 59
what?
masales emuswa 59 anoignowewa here
And myself they reduced. One is FIFO and it. We start by removing the balance of what? Of 80 here.
Yeah.
Then we left 120. 120, this 120 we take it from this 300.
So now,
Are you together? We do not ignore the cells, but these cells, one we're supposed to sell good remaining, which was purchased on the first, which were what? 80. We are now
yeah.
200 minus 120 is 80. So it's 80 here. Are we together?
All right, tona kudai so mudzidzisi. I think pekutanga musi wa1 October nti takatenga zvinhu 200. Like pamba zvinhu 200. Pakatengeswa Tony. So 1 October tona it is a purchase and
Yeah.
that's
Takatenga, what we do, listen and listen. And we have got 200 units in our stock and listen. Value is 20 rand per unit. Are we together? But what happened, there was a sale on the second. Which means that our sales, if there's a sale, is an inventory movement out. So it's 200 minus 120, which means that says we have got now a balance of 80. Are we together? Of stock. Then this 80, we purchased again on the 5, 300. So we now have 300 plus 80 in our stock. But the rule of FIFO, when you are now selling on the 15th, this 200, we need to start by selling 80 the balance. Then we remain with 120. Do you understand? Then 300 minus 120, we remain with 180 in our inventory. Do you understand? Hello, can we have one meeting?
Pane ari kutaura uyu.
Uyo ngautaura ngadziwe. All right, let's go to this. No, you understand as you go now, just explaining from this to this week the example. Okay. Inventory at the end, 200 minus 120 plus 300 minus 120 plus 150 minus 150 gives us 180 units.
Yeah.
Okay. That's the remaining. Then FIFO, because I was saying, if you go to FIFO, you only left with 30 here. That is 150 times what? 30.
Yeah.
That is 4,000. Then that is 30 times 24. That's what I was saying here. Then you get 5 to what? 0. Because what there's another lot. This lot was not even sold of 150 times 30. Then there was a 30 remaining which was purchased on the 5 at 24. That's why we've got this 150 times what? 30, 4,500 plus this one. Then on the average, you have to come up with this. Maybe it becomes very easy to go this formula. Cost per unit, then total cost per price. Opening balance was 200. The sales here were 120, then the remaining was 80. Okay. Then this 80, then you go on purchases with 300. Then we now have 380 minus the sales of 200. Then it becomes what? 30. But how do you calculate 23.16 here? 23.16 here, you were saying because here the balance was 80. That the balance was 80. If you say 80 times what? 80 times 20 plus 300 times 24 divided by 380, you get this figure. Are we together? Because no, the old stock cost $80. So it costs 20 rand per unit. But how much are they in the stock? How many units are they? That is 80. So it's 80 times 20 plus the new stock is 300 times what? 24. Then you say 300 times 24 plus 20 times 20 times 80 divided by 380. You get this figure. So
Alright,
which
say,
means
sorry. Apa tinoti 300 iyi and times 24.
yes.
Tono plus 80 times 20.
80 times 20 because the remaining is 80 but at 20 rand per unit. Yes. Then you add and you divide it by 380. Yes, then you get this figure.
Alright, saka 3 value yatowana ipapo muchemenge taedza izvo nekutimes ekudivide ndoipi yacho apa?
Ipi?
Like pachati 380.
It means we are now valuing our
It becomes mina alose ndimbozama kuonesana nawo seawa. It becomes our new number for the unit per unit. Because anditi mukuona here kuti 80 was made for 20 and then 300 for 24. Saka what is simply is saying ndezvekuti vari kuti tikatamza 80 na 20 totamza 324 we get matotals aya. Kana tamawana matotals aya tinozodivida nenumber yemaunits inova 300 plus 80 to get a new number of a total per unit.
Here, 80 times 20, 1,600, 300 times 24, 7,200. Then it's 8,800 divided by 380. Then you get 2316. Yeah.
Oh, ndoiyo yaiswa apo iyo pamaindicator neyellow. Ndaida ndiitsvaga kuti sairi kuzobayirwa kupi.
Then we go on, do you have a cost per unit manje? Because the average, what cost per unit average? Then we go to the sales 200. There's 200 now. We say 380 minus 200. Then we get 180. Just the 180. But as long as we purchase a new stock, we do the weighted average. And here we are now purchasing a new of 150. So it's now 180 times 23.16 plus 150 times 30.
Mr. D. Hello. I have a question. Apo pamaku 380 minus 200. That 200 amakubvisa yaipi futa? Masales yepekutanga iri opening balance counts.
Ani mukaona apa pamusi wa 5 handitika ani makatengesa 200 mukatengesa murikubvisa stock saka apa because you've got 380 units so it means you should subtract 200 on the 15 and can you see the idea here? Then you remain with 180. Then 180 on the 20 you purchased 150. You now have 330. But according to the rule, 180 is valid at 2316, which you calculated above. And 150 at 30. So to say 180 times 2316 plus 150 times 30 divided by 300 and what? And 30. This one here. We come here.
Yeah.
Are we together? Because our stock could not remain the same if we sell. So it's now 180 times 2316 plus 150 purchases. Once you purchase what we should do the weight average to get the new value. Then after I've got this figure, we say divided by 86. It's 8669 divided by 330. Then you get 26.27.
Saka apa nyaya apa ndekuti kana tatenga mumaproducts nangu maproducts ese tofanira kumapa weight yakafanana.
Tunawapa weight yakafanana after we've calculated. We don't just give them with the same weight. The same weight is arrived after we had said the original what price 180 times 23.15 times the current 150 times 130 when we purchased. Then we divide it by 330. Then it's now 26.27. That's the average weight.
All right. Zvabatika.
So those are only throughout. And do the closing balance there 180. Use the what the current average what cost per unit in 7 point something.
All right.
I think you now have an idea.
Yeah, zvakuita kaunzwisika.
So that when you go and the all right, so that's what we are supposed to do. We need to practice on this one. But what you should understand is that on the average weight is more complex than what the FIFO. FIFO is simple, but this one you say as long as you purchase, now what calculate the new price, the new cost. So here you purchased, which means that you are supposed to say you should calculate the new what cost price, because you are saying the stock the previous stock's value was now 80 times 20 plus the current 300 times 24. Then it's now 80 plus 300, 380. So 380 into the value, the current value of the 380 product. Then you get the new figure. Hello?
Pamamitaura ngeyambokata saka tirachetango.
Oh. Ichiva mwako explaining.
Mati? I think I'm going to cut you. Yeah. Guys, I mean, I'm going to tawanda, Madi.
Kufamba mchana mdara. Inini ndoda kutonzwisisawo pa FIFO.
Pa FIFO. Ore. Like that, ngokata kuti pari patanga utsanangurwa chabva apo pane zveyelo izvozvo ameno kana story.
All right. Listen, we've got a balance here, and we have sold here, and on the 210 and we sold a product for 120 units, and so what remained is 80. So once we purchase a new product, we should now value those products in the average way. So because we purchased on the 5, it means here we have got 80 times what? 20. Because this one we purchased the 20. 20 was a balance after we sold. We noticed 200. But because 300 we have used 2 to sell. So 300 times what? 24. Then we get 7,200. Then the figure which we are going to get 8,800 divided by 308. So 26 is our new price.
Yeah.
So when you go to when we purchase again on the 20 year, we are going to say the remaining was 180 because they've sold 200. 180 times 23 what? 40. You understand?
Yeah.
Then this one 150 times 30 is made like that. Then the average, we are saying 180 plus 150, that's 330. Then we get the what? The figure which you are going to get here.
Yeah.
So you are going to say 869 divided by 330. Then you get 26.27.
Yeah.
Are we together? So it means that the closing balance of 180 multiplied by 26.27.
Yeah.
I think we are now together here.
Yeah, sure.
Then periodic unit here when you are going to periodic inventory record in the system, open balance 200, then cost per unit 20, purchase 324, 150, that is the periodic, which means that is 15,700 divided by 624.15. This one is simple periodic inventory record system. Just multiply 200 times 20, 300 times 24, the cost price which is used when you purchase consideration. Then after that, 650 is 15,700 divided by 6, which find the average what is the average price? 24.15. The balance was 180. So it becomes 180 times 24.15, 40.45.
Oyatuti the balance was 180 like stock yakasara here. Closing stock. Yeah, it runs with you.
Tawanda. Hello, Tawanda, your end is up. Hello, Tawanda.
Maybe network problem.
Okay.
Yes, sir.
What we need?
Yes, sir.
Hello.
Ndachida kuti paweited cost apa ndapabata especially cost unit price kuti inowanikwa sei apo, but FIFO apo ndo pandarasika kuti inenge ichifamba sei cost price yachona per unit per unit.
Okay. Zvatineta paFIFO handiti. FIFO chinoti isusu kana product, for example 120, and here we've got 200, then there was we sold 120 plus 300. We find out that at the end of the day, plus 300 minus 120 plus 150 plus 150, and we remained with 180 units. So 180 units, here to be simple, you go and look, 180 units covered which period? It covered the latest period for 180 units is 150. Then there's a shortfall of what? Of 30. So it's now 150 times what? 30 plus the remaining 30 is the latest order. Okay. So here 150, then the 30 was purchased on what? On the 24. Because the 150 here, it was 180, 150, it covers this period, sorry, this period of 150. That is 150 was purchased this period. But there's two 30 in the inventory, both make it 180. So the 30 will come to the next purchase here, it was 24. So it's 30 times what? 24. That's why 150 times 30 plus 30 times 24. Because those were the last, so we consider the last ones. So the figure of 180 covers the current period of 150 and the previous period only 30 times 24.
Handi edu mberi ndichazoona kuti ndodii because pari kunatsondivhara ipapa.
Alright, maproducts akasara musystem mangani handi 180 ukwaona.
Chibaba yachiye.
180 handiti. But 180 aya zvikureva kuti kune mamwe akatengwa musi wa 150 aya ose aya haana kutomboshandisiwa kana iri FIFO, ndozvazvinoreva. Unotanga kushandisa wakadi akudhara. But pane 30 yacho 180 zvavati awo akatengwa musi wa after before this akatengwa musi wa 5. Saka apa unotarisa price yacho is 24 iyi. What 30 times 24 plus 150 times 30 ndiyo iyi.
Alright.
Handidi kuti muite musina kuzozwisisa because zvakakosha.
Sorry, pekupedzisa apa ndomura mudzosere rimwe racho. Slide.
Dzokororo ine simba ipapo. Panda kumbodzikororwa pachiri kundivharawo kana inini.
Talking slide question.
Your question FIFO and DT. They are saying what was first in the inventory should be sold. Are we together? And the only value what is latest. And so what is in the inventory? Even if you look here, your inventory is got 180. Because if you are selling, the inventory is moving out 200. It was inventory in 120 sales 300. It was purchasing 200 sell 150 purchasing 150 sales. So if you've got 180 units in your inventory, how do you account for this one? You look for the latest values, which means that 180, 150 was not purchased. This purchased 150 was not even sold. Then it remained 30. So 30 also was not been sold on the which was purchased on the 5. That's what we say. Because people are saying we start by selling what we purchased first. That's why we've got 150 here plus 30 here. 150 times 30 plus 30 times 24. Then we get what? We get this figure. Okay. I think as you practice, you understand it. Then what I want you to do is to go and give an exercise. Okay, I understand this one is the practice. You understand it's the FIFO and the average weightage. So what I want you to do, you need to go and do the examples in this book at the comfort of your home during your holiday. Then you do. Then I'll give you an exercise to practice. Okay, any other questions? So wind up. I heard some of you are traveling and some of you need to go to holiday. Any other questions?
So next same Rengorin.
Next week and
Was I to go follow that timetable?
Marty, I'm not timetable.
And I won't be on it.
Alright, can you go to Dr. Famba?
Alright. Nemecha basa. So which means to go follow that. Yeah. It's about to Uraya.
I want to
Sure.
Yeah, sure. But this account is about
Marty?
Okudesa bratambo dzita account sandowe kutanga iwa takutanga tachafamba.
Yeah, mozvinzwisisa manje muntu kuti azvinzwisisa ndosama kuti zve simple.
Yeah, zvinzwisika. Thanks for your time.
Ndatisabimba mari zve kumabasa techikure mari takangwarisa.
Yeah, sure. Maybe.
All right. So we'll see. I'll send the exercise for practice on this topic of exercise to the group. So enjoy your holiday.
Ingori exercise cheta isi assignment naika.
All right. Exercise.
Okay, thank you very much.
All right.
Okay.
You have a nice holiday.
Thanks a lot, Doc.
Same to you, sir.
Thanks. Assignment anoda takuchikora.
Tegas urecha
Tegas ndiri kuuya kuinbox tipedzerane paFIFO.
nayo but ini ndindadi ndindadi nayo but
Handiti apa pauri kungoita wokuovhera.
uye but usatari
Handiri kungoita wokuovha wanda wakazvita kare here.
Lecture yapera.
Antichi.
Meeting yapera.
Njana dar. Ah.
Ngoro jaka shawa sana.
Masi mutsikanda chanyada.
Ne vote ngara kiri na date kiti. And meeting yapera.
Aseta pere yakanzi 80 to 4 chakadai.
No, immediate meeting at all. Like I'm not kind of. You're gonna give it to OT. I'm gonna go.
Are you part of it?
Your leg is.
This year I will not drink. I think near until the end of the year. I haven't. Nenyamaga ndakatostop still.
You are a vegetarian. Yes. You have to start. Spike into a value time. You have to move.
So I was all along.
Hello, sir. Hello. Hello.
Is it a message to me?
Hello. Hello, sir. Hello. Guys, pane progress rinonzwa pari silent lecture chacha munzwike pango display and green page patonga almost 20 minutes. My problem network to my side. Can someone help? Andreas Mdov, hello. Hello.
Speak.
Who's that? Hello?
Yes, I've been asking, pane pane chiri kuitwa here kana kuti zvinenge zvatokata because hatisina chatiri kunzwa kana audio yeprogress yelecture.
Kanene hapana chandiri kunzwawo nene. I've been thinking that it's my side. Saka it means maybe zvakata somehow because inini handisi kunzwawo nenewo. Ndingoona that thing chamboshifta but hapana chandanzwa. Hapana handichanzwa.
These are disadvantages of e-learning. Because it seems that maybe I've gained at least 3% of the lecture kubva na8 because hazvina zvazvimokumboto zvimokanzwa wozobatira pamberi.
And you were also at work, trying to manage work. It's very challenging. How do they have a lecture from 8 in the morning? Surely.
Yeti vazhinji, most of vanhu we start work at 8.
Yes.
Woti wongosvikira kubasa wosvika wakananga paGoogle Meet. This is unfair. This is unfair.
So I'm trying to also understand what was the lecture about in the purpose and the one which was a stock.
Zvandinotongoona is all about inventories, but I've missed a lot because pandazongoona wanga kuita ma-weighted averages ndazvibatira zvapakati, but the meaning of the lecture this is unfair. I think our Dr. T. Famba must assist us on that because kana zvitonzi this is the end of the topic yacho decides zokora hatina zvatendaita. Because pamwe pacho ndogona kufollowa hangu matutorials on internet but ndipo unozonzwa kunzi kana kuti zvawakafollowa izvezvi hazisiri kuitwa zvimwe musyllabus kana kuti hatichadaiso you see it will be a disadvantage.
Tapinda dambudziko huru chairo and nekuoma kwakaita accounts ka one lecture zvazvina nedata nzi paholiday but still I don't know.
At least schedule time yao for tomorrow was very fine. At least kana even devati kana kuti meeting toitanga kana kuma 3 nhasi vazhinji vamwe vanoita half day, it will be a benefit kune vamwe. But as you see kwatasa panhu hobhoisa ungari kuma 40-50 something panonge pangoita kana 2 vanhu vanzwa this lecture zveshe ende vanhu vanganyanya kutaura 2 chete apa ameno zanzi office naniko vari 2 only.
Saka indaongoibuda hangu ndapo zindatry ndotoita zvebasa rangu. I'm leaving it. Yeah, ndoita zvebasa. Tichangoona kumberi uku ndirifanira kutoita self taught.
Pakaipa boys.
Iri bo.
Yes. Kuda kuvi try to embrace the technology neyakumana. Vari kuuya mudzidzisi varipo vese nadokta varipo vari kudzoka manje.
Hello, hi team. Hello.